Welcome to our daily Forex market analysis, and this is for trading on July the 17th, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. All right, as usual, we'll start off by taking a look at our calendar here. In terms of the data here, we did have some data. ECB didn't really change anything. Today's data was better than expected here. Coming up on Friday, not a ton of data, but we do have EU summit. So with the EU summit, the important thing to keep in mind here would be any kind of comments that we get in terms of negotiations. So the 750 billion fund that they have, they need to do something with it, use it. And for that, they have to come to an agreement. If they don't reach an agreement, that will be negative for euro. So we could see euro drop as a result. So we'll keep an eye on things there. We also have final CPI numbers here for euro. Now, these days, the data has been coming better than expected. And if that's the case, we're likely to see euro go up. And we saw this for British pound. We saw the positive data that came out for UK in terms of the employment data, and British pound pushed up. So same thing here. If the data is better than expected, I would look for euro to go back up. We also have Bank of England, Governor Bailey speaking. Now, the only thing to here keep in mind would be comments in regards to what their forecast is for the economy. So lately we have seen an increase in coronavirus cases around the world, essentially. So US, of course, is leading at this point in terms of the number of new cases that are being discovered, and the number of deaths have gone up as well. So before, when first we started, after opening up the economy, we started seeing an increase in cases. There were a lot of cases in the younger people, and the number of cases were going up, but the number of deaths were not going up. And as a result of that, we did see our stock market sort of motor on here. But now that the number of deaths are increasing, that may weigh on the stock market. So we'll have to keep that in mind. Right now, the market risk sentiment is still in the positive territory. It hasn't quite turned negative yet, but we have to keep an eye on it, because we could see, if this trend continues, then we're likely to see change in the risk sentiment. But as of right now, the number of deaths have gone up, and now there are concerns in terms of opening up the economy. And then we also saw that President Trump had to basically walk back the policy. The new policy that they were putting in place was that if all the international students in the US would have to go back to their home countries, and they couldn't stay in the United States if their classes went online only. But a number of universities put pressure on the administration, and also lawsuits were filed from several different states, and also from our Ivy League universities. Harvard was definitely had a lawsuit. Then MIT also had a lawsuit, and I think some other Ivy League universities had lawsuit. Now that policy has gone back, so students don't have to go to classes on campus. But overall, basically, now there's also concerns around shutting down, or people having to go back into lockdown, and that will be negative for the stock market. So that's something that we'll have to keep in mind. So we'll keep an eye on how things unfold here. But just watch out for risk sentiment turning negative. If the risk sentiment turns negative, which means the stock market starts to drop, that means we are likely to see the yen crosses drop, and the US dollar crosses drop, and Swiss franc crosses drop as well. So that's what we are watching out for. Right now, it's in more of a wait and see mode. So once that shift happens, we could see another drop, and we could probably see, or we're likely to see, I should say, all this big move up. We're likely to see sellers coming into the market, which can push things down further. So right now, it's wait and see mode. All right. So now let's go on to our charts here. We'll start off with our euro dollar here. With euro dollar, we have a nice bearish engulfing candle. So yesterday we had a pin bar, and today we have a nice bearish engulfing candle. So bias is to the downside here. The concern will be this support resistance level. As we can see, this support level was a resistance level previously. So price has struggled at this support resistance level several times. So if it fails to get through, we could see another leg higher, at least towards the top of these candles. So that's the caution. Now bias is bearish. What we need to see here is a drop through the support here. If it does not drop, like I said, it could go further. But once we do see a drop, then we're looking for a further move to the downside here. So in this case, the first target here is a 1.1350, and then the second target here is a 1.1300. So bias here is bearish with caution though. Pound dollar here, pound dollar is looking bearish as well. However, it has been trading in this range and it is still stuck in that range. So today we did see price go up and then it did drop here as well. Now, the problem here, or the concern here, would be that it's stuck in this range here. It hasn't broken out of the range yet. So I would say bearish to neutral is the bias. But for it to really be bearish, we have to see a break here for a continuation to the downside. If we don't see that break, then very likely we are looking for a move back towards the top of the range. So for now, I would say neutral to bearish. But once it breaks through the support, then we're looking for bearish. But if it holds above, then we're looking for a move back towards the top of the range. And if it does break here, next target would be 1.2480, and then below that we're looking at 1.2420. Sorry, excuse me. Okay, Aussie dollar here. Aussie's looking weaker today. We do have a nice bearish candle close here. Again, the concern here is our support and resistance level that it's into right now. So 69, 50-ish level here. If it doesn't break through this level to the downside, then we could see it again go back up, because this is the support resistance level. So price has reacted at this previously. So this will be an important one to keep in mind. So watch out for that, but bias is bearish. Once we see this drop through here, next target here is 0.6920 and then 0.6880. So bias here is neutral to bearish for Aussie dollar as well. New Zealand dollar, this one also we see a nice bearish candle close here. So bias is bearish. But again, keep in mind, this has also been trading in a range for almost 2 weeks here now. So bias is bearish. Watch out though. Again, just like it did here, we could see price come into the support, and if it doesn't hold, then we could see it go back up. So that would be the concern. But bearish bias. Next target here is 0.6500 and then 0.6470, and then below that we're looking at 0.6430. So bearish bias here, or neutral to bearish bias here for New Zealand dollar as well. Dollar CAD here, this one wasn't able to hold below the support yesterday. Now we are back into the range. It's still in this range, and it's been in this range for the last 2 weeks. And at this point, we see that price is into resistance. We do have a bullish candle close, but price is into resistance. So if it holds below 1.3580, then we're looking for a move down. But there is bullishness in this. So we could see price go all the way into 1.3650. All in all, though, this is still neutral because we're still in this range. But if it goes through the high, through today's high, I'm looking for a move back towards 1.3650. So neutral to slightly bullish bias here for dollar CAD. All right, silver here, looking at Our silver, this is looking bearish here. We have a bearish engulfing candle close here, railroad tracks. So bias is bearish. 18.85 is the first target here. And then we're looking at 18.65. So bearish bias for silver. Gold as well. This is looking bearish at the moment. We have a nice bearish candle close here. Now, as long as price holds, so we have to make sure, or we have to see that price holds below the support here. The candle is a nice bearish engulfing candle, but if it gets stuck into the support, it can still go back towards the top of the range. So watch out for that. But as soon as it breaks through the support here at 1793, then we're looking for a further drop here towards 1787. And then basically potentially into 1775. So target here is 1775, and then below that, we're looking at 1765-ish area. So bias is bearish, but really watch out for this support here. This is critical because this is the range it's been trading in. If it doesn't break here, we're looking for move back towards the middle of the range, or possibly towards the top of the range. So for now, bias is bearish, and just with caution. Oil here, oil's still struggling here. It's stuck in this range. Even with the OPEC meetings, that hasn't really helped here. We have a very small move. It does look bearish right at the moment. So bias is bearish. And first target is 40.20, and then we have second target at 39.20. So bearish bias here for oil. Copper here, copper has gone in both directions. Yesterday we were looking for a drop, we got that, but then it has pulled back from there. So now, as we can see, price is into that resistance here. So if it holds below 2.86, then I will look for a move back down. But once it goes through, then we're looking at 2.90. So right now, neutral bias here for copper. Bitcoin here, we were looking for a drop yesterday. We got a bit of a drop. 89.50 is still the next target, and then 88.50 will be the one below that. This one has also been sideways here. It's been stuck in this range here since April, essentially. So still in that range, and in this case, bearish bias for Bitcoin. S&P 500, we do have a bearish candle close. We have a nice bearish engulfing candle close. The problem here is it is still holding above that 3180 support. If it holds above this, we could still see another move to the upside there. So watch out for that. So right now, my bias is neutral to bearish. Once it crosses through here, 3185, then we're looking for a drop here. But until then, while it's holding above 3180, this one could still go higher. So neutral to bearish bias, only once it goes through 3185, then we're looking for a further drop towards 3155, and then potentially 3125. So bearish to neutral bias here. Nasdaq here, we do have a nice bearish engulfing candle close here as well. But again, we are into support. So if it doesn't go through, again, we could see it move back towards the top of the range. So bias is neutral to bearish here. Only once we see a drop through, we're looking at 10,355, and then below that 10,255. So bearish bias, bearish to neutral here. But if it doesn't go through, then then it's turning. Dow Jones here, same thing here. We do have a nice bearish candle close. We were looking for a drop there. The problem again is the same. We are right into the support resistance level here, and price is not broken through that yet. So for this one to really be bearish, we need to see a break and then a drop here. For the time being here, so bias is bearish, just the caution would be the support resistance level at 26,600. Once we see a drop through that, next target would be 26,280 and then 26,000. So bearish, neutral to bearish bias here for Dow Jones. And then we have DAX here. DAX hasn't really done a whole lot. It's been stuck in this range for the last couple of days. So neutral bias here. If it holds above 12,760, then I'm looking for a move back towards 13,000. But if it drops through here, then looking for it to come back down towards 12,500. So neutral bias for DAX. FTSE here, FTSE did have a bullish, well, we saw a bit of a drop, and then it did end up slightly higher than the lowest point here. So it opened and closed at exactly the same point, essentially. So right now, bias is neutral. As we can see it's been stuck in this little range here. This is the wider range. It's been stuck in since May, essentially. And now we may see a move back towards 63.50, and then if it holds below, then we're looking for a drop back down. So we may see something like this. So bias right now is neutral. I'm looking for a range-bound move here for FTSE as well. And then we have Nikkei here. Nikkei does have a nice bearish candle close. The problem, again, just like some of the other ones that we have looked at, it's right into support. It hasn't broken through that support yet. So once we see a break here, then we are going to see a drop. But until then, we cannot be 100% sure. So if it holds above here, that could turn around fairly quickly. So for now, bias is neutral to bearish. Once we see a drop, then we will look for the next targets here, which will be 22,500, then 22,250. So neutral to bearish bias here. So that's it for now. Have a wonderful trading day, and I will see you later. Bye for now.